I know too many people who lost money in that scheme. I don't want to ask you the mechanics of how the money got lost, but I'm assuming it's something like you put in money, maybe they're paying back, you go and put in back some money, and then finally they just said,
And then
oh,
one day
it just goes away.
just like the whole website crashed. We just went into thin air.
Just disappeared.
Just disappeared. I know. I heard people who lost more. Like people had money in tens of millions in this stuff.
So apart from that, did you ever lose any money again in investing or any scheme?
I did the second time.
I'm really sorry. I'm not. I'm laughing because I know you.
You can laugh because it's funny now.
Why I'm laughing is because I know
then it wasn't funny, but now.
Funny. Why I'm laughing is because you shared the story and you were so funny about it. I'm like, what? That's a lot of money.
I'd come here. I'd started saving again.
Okay.
And then everything was going on well. And it was actually a friend of mine who introduced me to this Forex. So this wasn't Ponzi. This wasn't like bring one person, bring another person. No. This was Forex.
Hello. I'm delighted to have Dr. Maryjane Ibadin here, who is a member of the MoneyWise Doctor Mastermind and an ITU Registrar in the NHS. And we're going to have a fun conversation. She will share her financial journey and her journey in investing and things she's learned in the whole process. Delighted to have you here, Dr. Maryjane.
Thank you so much, Dr. Andy. It's my pleasure, really. It's been a long time coming, so I'm happy.
It's been a long time. We've been planning to this podcast, but doctors are busy. ITU Registrar, so I can imagine how it shifts and all that. The first discussing this last year September when you attended our 4 weeks investment academy and you shared some of your investing journey. I thought, look, I like your story. Sometimes it's interesting to hear other people's story, real life and all that. So I'm going to start. I know I've tried to introduce you, but I haven't done a full justice to it. Tell us a little bit about yourself, where you work, and basically one thing that most people who work with you don't know. Like mine, I play piano. Most people don't know.
Okay, so like you said, my name is Maryjane Ibadin. So I came into UK in 2021 and I've been working as an ICU registrar. So basically I have ICU and anesthetic background from back home, Nigeria. And that's why I've been working here, mostly in ICU, but I've done quite some months of anesthetic also. So I work as an ITU registrar at North Middlesex Hospital. So it's one of the hospitals in North London, around Tottenham, close to the stadium. Yeah.
White Hart Lane.
White Hart Lane, yes.
Yeah. I was there 2 days ago
that's
to see
really, that's where the stadium is, yeah.
Amazing. ITU registrar. I look at ITU jobs. Obviously, every specialty is important, but IT is at that point. Your patients don't even talk, and it's like hanging in the balance, and everyone is wondering, oh, it's an ITU, and we've got 10 beds. Just 10 beds. We can't take more people. It's critical work, yeah. So I'm delighted to have you.
Thank you.
So that means you've been in the UK for 4 years. And
4 years now, yes.
4 years. So you've had experience working in the NHS and obviously looking at things like from the point of your finance as an international medical graduate. You moved into the UK and settling in, but your life didn't start when you moved into the UK. Obviously, you've worked previously, you've done other things, and I know you've also started investing before you came into the UK. So a little bit about your background in terms of finances and how it was. Obviously, you went to medical school. Yes, it's a real doctor, not like Dr. Dre. She's a real doctor. So give us a little bit of your background.
So yeah, basically, like you said, so I've been here for 4 years. And yeah, I think you said something just now that just made me remember something. You said that you probably have been investing back home, which is true. I literally just remember that. I actually opened up do you know Bamboo app?
I know Bamboo app. I
just remember that. Yeah, I actually was investing back home in Nigeria before I came here. But somehow when I got here, investing wasn't on my mind. I honestly don't know what happened, because I think I was involved in other things which we're going to like get into shortly.
The other
So
things
that
is
thing
very
literally just
interesting
flew
bit.
away from my head. Like it just looks like I just had a light bulb moment. Like, yeah, I actually have. A few days ago, I went back to the Bamboo app and I checked. I saw that I had some shares like Tesla.
Wow.
Yeah.
Wow, interesting. Now, you said there were other things which we're going to discuss, and I'll keep it short. Yes, you've got
Yeah.
an interesting background. One of the things you shared with me was how you lost about quite a bit of money in investing, and how, unlike other people, you took it and made the loss like a school fees. You actually use that loss to learn how to invest properly. Um, but before you lost the money, you've already started investing quite sensibly,
Yeah.
regular investment and all that. So, but how did your journey of investing start? I don't want us to get into the juicy bit, crypto and all that, or the money loss. I want us to
Yeah.
start with the background. How did your journey of investing start at all? This is how to get financially smarter in just 5 minutes. Sometimes the difference between making smarter financial decisions and costly, horrible financial mistakes is having the right information at the right time for the right person. So every week, I write the MoneyWise Doctor weekly newsletter. It's an email newsletter packed full with valuable financial insights and updates to help you make smarter financial decisions and avoid costly mistakes. Some of the areas I've been covering over the last 70 weeks include actionable tips on tax strategies, pensions, investing, side hustles, and several other financial areas. Now, join thousands of medics who subscribe to the MoneyWise Doctor weekly newsletter to receive it straight to your inbox, and it's totally free. Don't miss out. Subscribe now using the link in the description. And now let's jump right back to the episode.
Honestly, like, even though I was investing, I wouldn't really say it was sensible. I was into social media, like not really like into social media, like I post content or anything. No, I just follow quite, should I say, a number of sensible people.
Yeah.
So somehow I think I stumbled into like one or two people speaking about investing, like on Bamboo app, and there's a lady on Instagram too that I stumbled into. And honestly, like the stocks I have on Bamboo, I did not know anything about anything. I just bought them. I'm not even gonna lie. They're just like random things that I bought. They were like things that were really trending, like Apple, Tesla, and then so a few bits and bobs. So yes, I did have some investment. I do have the investment back home from Nigeria, but then they were not calculated investment. I knew nothing about it. I just bought them.
Right. So this is like sort of like a stab in the dark. Now, looking back with what you know, you've attended the Investing Academy, you've learned a lot. I've seen the kind of high level questions you ask about your investments. You're making sensible investments, you're being careful about them. Looking back now, what do you think compared to the investor you are now and the investor you were back then?
Oh yeah, looking back, definitely I've acquired like loads of information. There are things that I would never have known. I mean, like never. If I didn't like join initially the 4-week investing, and then now I'm also in the mastermind, there are things I would never have known. So it's been a journey, really. I'm not gonna lie, it's been a journey, like learning everything from scratch, learning like the metrics. I didn't know what ETFs were. Yeah. I knew nothing. But now I know quite a lot of things, and then even when I'm thinking of like buying something, I know what to look out for. And then I have the videos to like go back and refresh my knowledge, watch them, or I can like post something on the premium group and get answers to the things that I need.
Excellent. Now, when you look back at your investing journey, like you still have stocks obviously that started investing. What inspired you? Obviously, you were watching in social media. Many other people watched social media and then followed what people were saying on social media to start investing. But what sort of like drove you? Was it just listening to people and thinking, I want to make money or I want to invest for my future? Were there any examples around you or people you saw investing? What drove you? Because most doctors are usually quite afraid of investing. So if you had started that early time to invest, what was the primary motivation?
It was mainly the thought of like investing for my future. Because even though I didn't know so much about investing, but I knew I didn't want to keep the money in the bank. I wanted something like, so it was more like to have security for my future, for my children, for my family. That was what was at the back of my mind, even though I didn't really have so much knowledge at that time. So I think that was like the driving force or the driving factor. So in terms of investing, I didn't really have so many people investing around me. So it wasn't like I had someone around me saying, "Oh, you have to." But I remember my dad had like some stocks and shares like from the big Nigerian companies. Because funny enough, even now, do you know that I came across some of the stocks he bought online on like one
Okay.
of the Nigerian websites? I'm like, oh,
Unclaimed
okay.
dividends.
Yeah, exactly. As in, I bought my partner, my husband bumped in and I'm like, oh, I saw your dad's name on so and so website. Did you know he had? I said, oh, yes, I knew he had like some stocks here and there. But that was all. Besides my dad, there was really like nobody around me. So it was mostly something I bumped into on social media. And then after I bumped into it a couple of times, I just felt like, okay, it made sense to like invest and not keep the money in the bank. Really, that was the motivation.
That's an interesting. I find a lot of doctors who know this in their head, but actually going into the next steps. And after having talked to, we've had more than 1,100 doctors pass through our masterclass,
Oh,
like the
wow.
pre-investment masterclass. And one of the biggest issues is fear. And that fear is driven by not knowing what to do. For instance, you're an ITU registrar, you're holding that blip. What do you think if I got like a brand new doctor who's never worked in IT and I gave them that blip? They will really, really be
Be
worried.
afraid, yeah.
Even if you are not ITU doctor, I mean no disrespect to our colleagues in psychiatry. Your work is very important. But if I gave a psychiatry doctor your blip, I mean it could be mayhem. So if you don't know what you're doing in investing, like now you're dropping some terms, you learn how to analyze companies, you understand ETFs, you know what type of investor you are, whether you're passive or active, how to manage your risk. So that knowledge is actually reduces the fear. Without that
Yeah.
knowledge, you will be a risky investor and you should be
Yeah.
very afraid. Because most people think, oh, I'm just going to buy S&P 500. But like, what's your ultimate goal? What's the long-term plan? At what point do you want to stop investing? Right. Okay. Now, prior to coming to the UK, how many years did you already work as a doctor? I mean, like, at what year did you finish your med
So I
school?
finished medical school in 2012.
2012. So you have 13 solid years as a
Yeah.
doctor. That's excellent. 13 solid years as a doctor. And in the 13 years you've worked as a doctor, what would be one big money lesson you say you've learned that affected the way you actually, and that lesson could be either a mistake you made, a mistake someone made, or something you learned that has actually helped you in managing your finances?
So I think the first thing would be budgeting my finance or budgeting my salary. Even though I'm not doing like 100% budgeting, but what I mean, like sometimes, like before now, when I get my pay, I don't really have a plan for the money. Like I just like distribute it as it comes. Like as things come, then I just do the
Spend it.
distribution. Yeah.
Yeah.
It was when I got here that I actually understood the importance of budgeting. So now I know that, and now I know that when I get paid, there's a particular sum I take out for savings, and I know how much I'm paying for my bills, and then I know like the rest is for to chop life.
Yeah.
You know, everything is. As soon as it comes, if you see the way I run and remove the money I want to save away from that salary, I fly. Like it's literally like after I do one or two important things to Baba God in heaven, the next thing I fly and remove the savings.
It's like you tight. So you
Yes.
tight and then you go,
The
okay.
next thing I'm removing the one for savings. So I know that okay, that one is sorted, and then I can now allocate the rest.
You can see me grinning from ear to ear. I feel so proud. This is something we stress in the mastermind. You pay
Yeah.
yourself first
Yeah.
before you go ahead to pay the mortgage you're paying for your whatever expenses you need to make, utility bill, council tax, this and that, pay yourself first. And what do we say? Amass, make it automatic. It should go out
Yeah,
automatically from
automatically.
your account, the same way you pay your other bills. That way, your lifestyle doesn't change. You're not going to change the type of food you eat just because 20% of your income is going out. And because most doctors usually, by the time you start investing, it's a little late. So you're trying to catch up. So you want to invest a significant, weaponize your income so that you can invest a significant amount sensibly. That way you increase your chances of hitting your financial freedom number, your financial freedom goal. Excellent. So now you're working as an ITU registrar. Which ST what are you?
So it's comparable to ST3.
ST3. So you're working as an IT registrar.
Yeah.
In the future, you're going to be a consultant, okay, in the NHS or wherever you decide to work, really. What are the lessons you're learning now? Because you came for the 4 weeks investment academy last year. You're in the first batch, and you came back again this year for the full mastermind. So you're in the financial coaching program, you get the one-on-one sessions, you're in the private group and all that kind of stuff, and you're attending other classes now, which is all around your schedule. You make the ones that fit and you go back and watch the videos. What are some of the key things you're learning now that, one, you are applying now to your finances to make sure that you're taking charge of your finances, and two, how you're going to apply that when you become a consultant or even as a registrar going forward? Can you share some lessons or insights that you've learned?
So insights, aside from the budgeting thing that I've spoken about,
That's a big one.
yeah, I think the other key thing I kind of understood from the 4 week academy was the tax code. Yeah, because I think I used to know it, but it was still a bit confusing, like how many percent tax you pay on this your certain range of salary and all that. And the third thing that I've actually picked on is the SIP.
Okay.
The SIP, I didn't know anything about that.
You didn't know anything about SIP.
No.
And we're not just talking about sipping some water here at tea.
Not sipping some water, no. SIP,
Okay.
like the private pension that you can open that would help you to avoid the
60% tax trap. Okay.
And then also help you to optimize your tax code and also make you tax efficient. Because I remember I was asking the question on the group the other day. You remember I asked you that
in the community group? Yeah.
Yeah, no, on the live chats. I think on one of the classes.
Oh, yeah, okay.
I asked you if you recommend like someone who hasn't hit the 100% band range, if you still recommend them to open a SIP, and you said yes.
Yeah.
Yeah, I think it was 2 weeks ago, if I can remember. And it actually makes sense because, again, aside from what you said, that whatever I contribute to the SIP account, the government is going to supplement that. It also helps you to be tax efficient because it's going to bring down the tax you're paying on what you have on your salary. So that's also something that I'm going to try, and I'm going to implement. I'm going to implement it before the next tax year. I'm going to open my SIP account and try to like put something inside.
I think those are two solid points. Obviously, what we focus on financial education. We don't tell you financial advice personally, but when we teach, we share what we do and people take it and apply it. Yeah. So what you hit is a big point. Now, this is a very crucial topic. Have you secured your family's financial future? Many times you're busy as doctors and healthcare professionals. That's fine, but if we overlook our life insurance and income protection until it's too late, we're taking a bit of a risk here. I mean, nobody can predict the future. You need to protect what matters most. Think about life insurance and income protection. This is really quite important to protect your most valuable assets. Now, if you're not sure about what you need or how to go about it, check the link in the description. I have a free guide that can help you step by step. Let's get back to the episode. Personal pension. Most people think, oh, but I'm not hitting 100K. Why do I need to put money aside to avoid the 60% tax trap? I'm like, hang on. When you put money in your SIP, you get tax relief from the government. And I'm assuming you're a 40% taxpayer. So you get 40% tax relief. That's the government actually encouraging you to save. And that relief comes to your account. And the maximum you can put in a pension in the whole tax is actually 60K. And that 60K includes your NHS pension pot, any private pensions you have, and any tax relief from the government. So that actually helps your tax efficiency. And at the end of the day, SIP, you can withdraw it at 55 now, even though it's increasing to 57 by 2028, compared to NHS pension that you can withdraw at 68 and may get to 71 soon. But look, NHS pension, it doesn't mean pull out of your NHS pension. It's still a great pension. Your employer is contributing, but you want to have a plan A, then plan B will be the NHS pension that you've got. Okay, those are really solid lessons. And if you could look back now, let's say you look back to yourself, your previous self, because you mentioned a couple of things, what you're going to do going forward, what you're doing, like obviously you're budgeting, you're learning how to be tax efficient, and obviously you're also learning investing, you're learning investing strategies. If you could look back, let's say 5 years back, what sort of advice would you be advising your previous self?
Oh my God, if I could look back 5 years from now.
This is the time to tell us about that crypto trade. you lost more money than you make it than some people make in a year.
Yeah, I agree. I think one of the things I would tell myself would be to be patient with saving or investing. And I can't stress how important it is to be knowledgeable about financial things, or like knowing how to save or knowing how to invest at a very early age. Because I think one of the problems or the shortcomings or the disadvantage, should I say, I had, or quite a number of people had, because nobody really tells you about investment. Nobody tells you about stocks, shares. You're only fortunate if you have people around you. It's just like they say, like most of the things you learn comes from people around you. Because if nobody around you is talking about stocks or savings, like how are you going to know really? Because I literally just bumped into that stuff on social media. That's because I use social media a lot. Because there's some people who don't use social media. And it also depends on like the people you're following. So if I didn't know about it, and I think that's one of the things that really that quite a number of people are actually facing. Because if you don't know about it, then you don't know about it. If the people around you don't know about it, then you don't know about it really. So I wish there was a way to like incorporate like financial
education
or financial education, like real life financial education to teach people whilst they are young and upcoming, and not really wait till like you're in your mid 30s or mid 40s before you start. But again, it's never too late. Like wherever you start, then you start.
When you say real life, sorry to jump in there, what do you mean real life? Like not someone in a Lamborghini or rented
Real
Ferrari in
life,
Dubai?
like not 1 + 1 is equal to 2. We're talking about real life financial lessons, like example of what you're doing.
I'm just pulling your legs.
Not something you sit in a class and like you're jotting and all that, but like come out to the real world, like what is obtainable outside. That's what I mean. So I think let's go into the.
So you said the lessons you tell your 5 years is be patient. These are really important lessons. Be patient and get financially knowledgeable. It doesn't have to take your whole life over. Like you're a doctor, you're still doing your job, you've got your family. But just spending like a few minutes every week, or even sort of attending one course a year, or reading one book, you are way. I know that because you're in the private community. Your financial knowledge has jumped quantum leap, and that's affecting your investment decisions just because you became conscious of it. The challenge is that as doctors, we don't know what we don't know. As an investor, if you don't know what you don't know that, like someone didn't know about SIP, so they didn't know that they could have been getting that tax relief. Okay, so share with us. You said you've made some investment mistakes that you obviously learned for. Could you share some with me?
I have. So I think the very first mistake I made was back home in Nigeria. It was during the saga of MMM.
MMM. So that's like Ponzi scheme. For
It
those
was
that don't know.
Yes.
Yeah.
It was like a full-blown Ponzi scheme. But that was my first encounter with Ponzi scheme. So I didn't know what a Ponzi scheme was. I didn't know about it. So it's not like I knew about it and I went into it. I didn't know. It sounded too good. Looking back now, they say hindsight is 2020. It sounded too good to be true. Now thinking about it. But at that point in time, it sounded like a very good
deal.
It sounded like a very good investment. So it was quite popular. Everybody was speaking about it. So of course I put some money into that. It was quite a large sum in Naira if you do the conversion.
How much was it?
It was over 10 million Naira.
Oh, that's a lot of money. I mean, for people who don't know that conversion, not using the current conversion, using the conversion back then, but because this happened like 5 years ago, 6 years ago.
Oh yes.
So if you had changed it to pounds, was it roughly in pound sterling? I think at that point probably 500 was the conversion rate. So if you're talking 10 million, we're talking about 2K or thereabout. We don't do public math, right? But every now and then we are faced with a little arithmetic. So I'm just going to do a bit of public math now. So if you're talking 10 million naira, and don't forget, it's not just about the calculation itself. We're also thinking about what we call purchasing power parity. What did 10 million really mean to someone at that point? Because you were working as a doctor and your annual salary or your monthly salary at that point was how much?
It was about, so then I was still
£20,000. That's what it was. Yeah, not 2,000. So 10 million. Using the factor of 500, which 500. It was.
This was back in 2020.
2020. So as at that point, I think exchange was about, I think it was about 400 to 500. Why? Because I did at some point had reason to change quite a bit of money every now and then. So if you're using a factor of 500, so basically that 10 million that you lost, the 10 million naira you lost was more like £20,000 if we compare it to the exchange rate then, and even if you bring it to the exchange rate now, to be more like maybe 5,000, do you think? Yeah. Well, at the end of the day, that was quite a huge amount to lose, and I would say that for most people that would be the end of investing for their life. And even though it's not technically an investment, but from many medics I've seen, once they've actually gone into a scam or Ponzi, because Ponzi is not a clear scam at the beginning. I mean, it could be a scam at the end, but it's usually like you put in your money, you're going to make money, and there's this mathematical equation, bring this person, bring that person, and all that kind of nonsense. At the beginning is not very clear. But most people, once bitten, twice shy. I've seen people that lost money in even an investment scam or a Ponzi or any legitimate investment, and then they didn't invest for 20 years, and then they wake up at 55 and realize, oh, I only have savings and I have my workplace pension. Let me start investing. Sometimes 60, sometimes a bit late. But despite that, you went back and started learning how to invest. What did it feel like losing that money back then? I mean, because you were a doctor, right?
Yes.
You were not like an oil baron or something. So I'm imagining £20,000 back then, or even 10 million naira back then.
It was a rude shock. It was a rude awakening. Thinking back at it, I was thinking, oh, I shouldn't have done. Like when you look back, you kind of like see the red flags that you failed to see at that time. So looking back, I was like, oh, maybe I shouldn't have. But obviously, like you said, I took it as one of those things. I took my L and I moved on.
You took your L?
Yeah, I took my L and I moved on.
I know too many people who lost money in that scheme, many close ones, and they didn't want to tell me at first. Then they told me, and I thought, well, this would never happen again in your life because now you've got that L. Take that certificate. Never ever. I'm going to investments you can't control. You don't understand how it
Yeah.
works. Yeah. I don't want to ask you the mechanics of how the money got lost, but I'm assuming it's something like you put in money, maybe they're paying back, you go and put in back some money, and then finally they just said,
And then
oh,
one day,
yeah, it just goes away.
it
Look,
just like the whole website crashed. We just went into thin air.
just
It
disappeared.
just disappeared.
I bet some people lost more. You know, people who might lost
I
houses,
know.
lost.
I heard people who lost more. Like people had money in tens of millions in this stuff. Yes.
They
People
lost
had
all of it,
lo-
just disappeared. Imagine if the same money was invested and it's compounding over years.
Oh,
Yeah.
it would have compounded beautifully, but
Well, look, we're not going to cry over spilled milk. You obviously open a new chapter. Those 5 years have gone. People lose money in scams. People lose money in schemes, and sometimes people lose money in investment. But what you're learning is how to manage your risk, how to make sure that no loss actually blows you out of the water. And some of that is through diversification, like what you've been doing. Some people buy like an index fund, an ETF, broadens their diversification. And some people buy individual stocks, but they don't invest a huge chunk of their money into individual stocks. So you're managing your risk actually going forward. So apart from that, did you ever lose any money again in investing or any
I did.
scheme?
I did the second time.
I'm really sorry. I'm not what I'm laughing because I know
You can laugh because it's
I know
funny
you.
now.
Why I'm laughing is because I
Then
know
it
you.
wasn't funny,
It
but
wasn't
now
funny. Why I'm laughing is because you shared the story and you were so funny about it. I'm like, what? That's a lot of money. That's £20,000 lost in an investment. Okay, look, back then, how did you come out? How did you recover? Because okay, what do you remember what you were earning in a year back then? Was it up to 10 million?
10 million. No.
Because we were working as
Obviously, it was my savings. Like
of course,
that
I
money was my
understand. I'm
savings.
trying to look at how many years work in
Oh, okay.
yeah.
So if say I was earning, then I was like earning about 300. It was about 200 plus.
200K per month. So this is like a whole year is like 2.4 million basically. So give and take, that is almost like 5 years worth of income. So what I'm trying to quantify is that it's not like it's some little money or change or something like that.
It wasn't.
But for many people to shake them quite a lot. For many people
It wasn't. It was literally my whole savings.
Your whole
I
savings.
remember.
How did you recover from this? It sounds like a big blow.
Luckily, the month the whole thing disappeared was the month I came to the UK.
Okay, so fresh start. Fresh start.
You would think fresh start.
Oh, please. I'm almost afraid to ask you the details of the second loss. I know it was something to do with crypto.
So I think that helped. The fact that I'd come into the UK on the same month. So that really helped to cushion everything. Because I felt like, okay, fine. I'm already here. I'm just going to start like, my savings all over again. So it helps to cushion the shock. I think that was why I was able to cope. And again, like I said, it's one of those things. I just took my L and I moved on.
It sounds like a very positive person. You're saying I took my L and I moved on.
Yeah,
about £20,000 here. Yeah.
I'm usually like, whatever, like
get on with it.
Yeah.
Like it helps in ITU if you're dealing with critically ill patients, like another day in the office. Right, tell me about the second one. That's the one I was scared to ask about.
I'd come here, I'd started saving again.
Okay.
And then everything was going on well. And it was actually a friend of mine who introduced me to this Forex. So this wasn't Ponzi. This wasn't like bring one person, bring another person. No. This was Forex.
It's trading foreign exchange. Yeah.
But again, I failed to look or to think about the risk involved.
Yeah.
Because the difference between you having the financial knowledge is that, like you said, you know how to apportion you know your risk appetite, you know what you're capable of doing, you know the things to put your money in, And even though you're putting your money in this thing, if it goes away, then you're going to be okay. You have like a cushion.
Allocation, your asset allocation as well.
Yeah. The mistake with the second one was I was literally trusting these people that I didn't really know 100%. So this is just like taking your money and giving it to someone and say, okay, take this money and trade for me and give me so and so percent. So that was the problem with the second one. The second one wasn't like Ponzi. You don't have to bring anybody, but it was like blind, foolish trust.
Yeah. So if I understand it correctly, is Forex trading, so currencies and all that. You didn't want to start looking at candles and all that kind of charts and all that kind of stuff. Like, I'm not a big fan of day trading, Forex trading, any random trading. I believe in long-term investment in solid companies with good underlying quality business. But back then, it was like, oh, we'll trade for you. You're a busy doctor. Don't worry. Give us your money. We'll sort it out for you and we'll make you money. Is that the sort of setting
that was the setting, exactly.
Okay. And obviously, were these guys based in the UK, outside the UK, or
they're based outside the UK?
They're based outside the UK. Okay. Sometimes that's a red flag, but that's not the worst thing. But almost everyone I know who has lost money, they couldn't tell me where those companies were on Companies House. Like someone that messaged me say, "Oh, I read your blog. I lost about them. I think that was like 12,000 or thereabout, and I lost it to this company." So I asked them, what was the address on Companies House? What are they registered for? I said, Companies House? What is that? I'm like, I need to do a video about due diligence. Like, it's so painful to me when doctors, because I know how hard we work for our money. Especially when you are, I don't do as much clinical practice, but I remember, like, obviously you are working a long shift and you make this money, and then someone can take the money and buy whatever they buy, Lamborghini or Ferrari, and then obviously be happy about it without actually delivering the service. So you gave them this money, they started trading. Were you making money at first before you lost money, or?
I was making money. I don't really remember all the details, but I was making some money out of it. But it wasn't compared to what I put in. It wasn't compared to what I put in.
What sort of money did you put in? I'm almost scared to ask. It seems like you swing big when you swing. Like with MMM, you put in 10 million. Please don't say something like £10,000.
It was £10,000.
Oh God.
It was £10,000.
I'm really sorry. Look, I'm just...
No.
I'm
like
not
I said,
laughing,
it's completely fine. You can laugh.
The way
because
you say
now
it,
it's funny.
And you've told it to me a little bit. I didn't know the full details, but you're laughing about, I'm like, that's quite a bit of money. That's like half of your ISA allowance.
So, just looking at the whole thing now, I'm thinking like the first money I lost, the second money I lost, if it was in my portfolio, now I know how much will be there.
If it's just there, invested, compounding.
Exactly. Even if it's just in like ETFs, I know how much it would have still compounded to.
Passively. No complexity.
So, but again, anyway, it's never gonna happen. That's gonna be the last time.
Are you promising? Are you promising everyone who is
okay? Like investing aggressively.
But carefully, patiently, managing your risk. Yeah, you've learned a lot about risk management and all that. Thank you for sharing so honestly, vulnerably. Most people, they take this loss and they never mention it. But I believe that this can actually help someone else to avoid making the same mistakes. Yeah. And the way you bounced back is really impressive, because some people take just one loss and that's it. But I'm thinking that once bitten, twice shy. Yours now will be twice bitten, forever shy. So basically you're now doing like sort of sensible investing and all that kind of stuff. So what's the approach to investing now? I mean, you've attended the investing academy, you're now in the mastermind. I think we've done one-to-one session for your financial coaching. You've got some other one-to-one sessions lined up. You attended the tax hack, didn't you? Where you were part of the tax hack to look at tax hack x-ray, to look at where you might be leaking tax and all that. So all that, if you were to start, let's say you're advising your 5 year ago self, you're telling them what you're doing now. Someone is listening, maybe it's a doctor, maybe they were born in the UK or they're new to the UK, or even not a doctor, someone who is thinking about investing. What's the approach you're approaching now? What are you doing now to avoid sort of like, you don't obviously need to tell us any specifics you don't feel like sharing, but the big picture.
So my approach now, with like stemming from the lessons I've learned and all the monies that I've lost, I'm still quite young. I'm still in my late 30s. So
that's true.
Like I said, I'm focusing on saving, like investing aggressively and cautiously. So it was really important for me to know the basics, like to understand like what was even going on, like even if it were just to like know what to look out for, know what is what, know what to look out for in investing, like the platforms and what to do. So my approach now is focusing. So most of all my savings now are into stocks and shares.
Most of your investment.
Most of my investments are into stock and shares, obviously. And then also, I'm going to say it was from your class I learned about emergency savings. I have my emergency savings now complete.
I was about to pull you aside for that to say most of your savings. Let's clap for Maryjane. So you have an emergency fund.
Yeah.
It's complete. So you are bold to go out and invest sensibly because you know you have your backup fund. Okay. What does that mean, really, for someone who has never heard about it? How would you explain emergency fund? Just quickly, what does that mean?
Emergency fund or emergency savings is figuring out what your essentials are for the month. So your bills, so your house, your electricity, food, just your essentials, and then multiplying that by 6. And then put that aside, so you have something to survive on for 6 months if anything were to happen, like a job loss or something like that.
3 to 6 months, but 6 months is solid. Yeah. Okay. Wow.
So yeah, I was gonna say that because I learned that prior to joining, I didn't have any
emergency fund. So just swing for the investments, swing for the fancies. But now you have a good cushion.
Okay.
You've done the 7 steps to investing.
7. There are 7 steps to take before you even start thinking of investing as a doctor or healthcare professional. Now, this is really important to secure your financial foundation before you start investing. Now, I've covered these 7 steps in a simple guide that I've made available for you in the link in the description. You can download it. It will help you to build a solid financial foundation, avoid common investing mistakes, and also make tax-efficient investment decisions. Start your investment journey the smart way. Download the guide now using the link in the description, and good luck on your investing journey. Now let's get right back to the episode.
You have an emergency fund. You're investing in yourself through your financial education, and now you're investing tax efficiently, which is one of the steps. You're using your ISA, you're looking at your SIP, you're taking all the available tax opportunities, and then you're going in to invest. So that before you even start investing, you've already started winning. So carry on your approach.
Yeah, so my approach, I was going to say, so I'm doing mostly stocks and shares now.
Stocks and shares.
That's my focus now.
Obviously, no bonds or anything.
No bonds for now. Because I think
30, you're looking at a long horizon, right?
Yes.
Okay.
Yes, that's why I mentioned that I'm still in my late 30s. So my focus is heavily on stocks and shares. And then also from your classes, obviously, as time goes on, as I start to grow older, then I must start diversifying into bonds.
Yes.
But for now, I'm just taking advantage of the age advantage that I have and just going into stocks and shares.
I love it. So basically, you're making compounding to work hard for you. I think we're about the same age. I think I started investing at about 19. And once you start investing, so it's 20 plus years now. Once you start investing, the first thing you realize, once you learn compounding, it'll be like, why didn't I start before now? But you don't cry over spilled milk. Where you start is when you start. The next thing you need to start is now to be intentional. Because if you started investing properly in your 30s, or you know what you're doing, you're focusing, even though you've missed the earlier period, but then you can now utilize what you have, which is an income, and then you can be systematic about it, because most people do this haphazard investing. They read something, they buy £100, £200, so they're not focused, they don't have a system, they're not sort of like taking a percentage of their income and investing it and making sure that it's compounding. And even if you are just compound, S&P 500 returned 25% last year, and not every year is 25%. Some years is like 8%, some years is like 9%, but average 8 to 9%. Even if you were in a global fund like all world index and you were compounding 78% regularly, you'll still be fine long term. And then if you did, someone like me, I've got like stock portfolio returning 87% some years, 78% some years, because I'm obviously exposed to more risk. I do individual stocks, not something I recommend to everyone who doesn't understand how to value companies. Yeah, but even if you were to just compound with the market, just invest passively over time, you'll still be fine. But most people underestimate that compounding. Those are really good lessons. Emergency fund, invest in stock and shares, depending on your risk tolerance and capacity for loss. You are less than 40, so you have a long horizon to invest. I'm assuming you're not planning to retire at 40 or 45. Yeah, so you have a longer horizon, so you have enough time to allow compounding to work in your favor. Someone who is 57 or 60 might not have exactly the same advantage, but you're obviously investing for the long term. Okay, because you are less than 40, I'm going to ask you, one thing I always say to people, that life does not start at 40. And what else does not start at 40?
Investing.
No, life, time.
What?
Lifetime ISA.
Oh my gosh. Lifetime ISA. Oh my
That's
gosh.
why your bleep has
1
gone off.
minute. Tesco.
Why is Tesco bleeping you?
The
Tesco.
Tesco,
Not Tesco. I thought it was Tesco.
No, not Tesco.
I'm like, why? What's going on here? You're a doctor. You're not working in Tesco. Lifetime ISA.
Lifetime ISA.
Does not start at first. So I'd imagine you have your sorted and all that.
I do have one.
Yeah, obviously, yeah, because there's
one.
lifetime cash and lifetime ISA cash and then lifetime ISA stock and shares and all that. Yeah. Right. Okay. So going forward, I mean, if you're going forward, if you were to say, okay, one final advice you could leave to someone who is watching, because currently you've done two big things. You started investing, but then you missed some footsteps, some mistakes. Then you went back and you started learning how to invest. Before we get to that final point, I remember that you were one of the first people to just sign up for my investing class. I'm like, it was very quick. I sent an email and I refreshed it and you had signed up. We'd never spoken before. We'd never met at that point. And then in the class, I asked you, what was the motivation? You didn't need to get on a call.
I ran. If you see the way I ran and signed up for that thing, I flew.
Was that because of the money you've lost previously?
It was because of the money I'd lost. It was also because I needed the financial education because I didn't have it. And it was
so why did you feel I had it? I could help with that.
Honestly, I don't know. I think I'd seen some of your posts on the Facebook group.
Oh, you saw some posts. You must have. Did you see my emails? Maybe my weekly newsletter.
I think I've seen your weekly newsletter.
Yeah. I don't think I had a YouTube channel back then. I don't think I'd started.
I don't remember, but I don't think I'd bumped into you on YouTube.
Yeah, because I didn't have a video channel till maybe.
It was just It was. I just felt like I needed like a systematic and orderly review. That's something about me. I always feel like I need something to be orderly. Obviously, there's social media, there's TikTok. Everybody, you can go in and just. But I feel like it's always like in all over the place.
Yeah.
So at least I felt like for the first time, I need something systematic, something arranged. That was why.
Do you have a systematic approach now to investing?
I do.
Obviously, I know that because we've discussed that. Yeah. Spoken like a true intensive care doctor. You want a step by step, not just a random
Step by
thing
step
going on.
review, yes.
You need a step by step review, a checklist, and all that. Any final advice? I mean, it's been delightful talking to
Oh
you,
my
and
gosh.
it was what the time and the plan, and I'm very grateful that you've taken out time, even your break from work and everything, to have a chat. So
My final advice to anyone who might come across this video, wherever you're watching it, is to get financial education. I can't stress it enough. You need to have real life financial education. And if you do have it, please pass it on to your children, your family, your brothers and sisters. Because I think that's the first step. You need to be financially literate. That's the first step to taking charge of your future or taking charge of your finances. In getting the financial education, you're then able to know what is available to you. You know about the stocks, the shares, bonds, SIP, that's when you know that these things are available to you. And then you know how to access them. And then you know how to save or invest intentionally into them. Because if you don't know these things, then you're not going to even know how to invest in them. So you need to know them. You need to know what is attainable to you wherever you are, in whatever country you're in. And then you work your way up from there, really.
that's really powerful. So financial education, as doctors, we don't get that sort of financial education training in a structured way. And you're now listening to random people on YouTube, TikTok, trying to tell you what to do, and they've not been where you've been. They don't understand your situation, and they are taking sort of like publishing the content without the context for your own situation. And you mentioned it's not just about passing wealth to children. The best wealth you can pass to them is obviously financial education and all that. Well, thank you so much, Dr. Maryjane, for joining me, and I look forward to seeing you around in the Investment Academy for the last in this current cohort. I think the last week is around the corner, and obviously till the end of the year with the financial coaching mastermind. And I'll see you in the private community. Thank you so much. And if you've been watching, let me know in the comments if you've got any questions or if you've got your own experience. Have you ever lost money to investing? What did you do about it? Did you bounce back like Dr. Maryjane did, or did you decide once bitten, forever shy? Tell us in the comments, and I'll be delighted to also answer any questions you have. Thank you so much.
Thank you.